Hey, welcome everybody to the weekly power sector review. My name is Tommy Lackey and I'm going to go through in today's video an overview of our equal weight sector indexes that we build as well as the subsectors. Then I'm going to dig down into the top three sectors: energy, financials, and materials. And then from there I'm going to jump down to the consumer services we've talked about a couple times in the last few weeks. And then finally we're going to touch on information technology and software on our way out the door. So let's go ahead and get started and see what we can see. When we start off with the equal weight subsector or equal weight sectors, I mentioned a little bit about this in the macro video, and if you haven't watched that, you might want to go back and watch that on our website to get the overview of the markets as a whole. But here you can see energy, financials, and materials are still on top and have been there. We didn't see much for shifts this week other than consumer services that jumped up 18 RS points. And 27 over the last month. But other than that, the top areas, the defensive areas, have pretty much stayed where they were over the last week. Energy had another strong week, up almost 5%. And when we look at our equal weight sectors and sort them by their performance for the week, energy is first, but then we go down to materials that made up some headway. Financials were still positive and obviously outperformed the markets, but weren't as strong. And then communication services was our fourth positive sector. Again, it was one of the weakest relative strengths up till recently, but now looks like it might be starting to change character. Again, 4 out of the 11 sectors were positive and 7 were negative. Now we move down to the subsector view. We can see here that your energy, and actually let me get this sorted correctly. From high down, energy and financials continue to litter the top with some utilities up there as well. But that doesn't necessarily show us the total picture of what we had going on this week. Energy continued to be very strong with exploration production at 7%. Equipment services at 6%. A lot of that precious metals even perked up as the weakest materials sector, which we'll talk about in a minute, but also had almost a 4% gain on the week. The rest of energy was over 3%. So there was a lot of movement in those areas. Semiconductors rebounded pretty well, and being one of the things that outperformed the markets this week. And materials had chemicals. Now, as we get down here in the middle, you can see communication services and media and entertainment, both not the highest relative strengths, but they are popping up on our performance for the week. So let's go in and start taking a look at some of these sectors and kind of see what's going on inside. Well, before we jump into the sectors, let's look at another one of our overview, or what we call our quick view pages. This is the sector and subsector short-term breadth. And as you can see, we have a lot of green and a lot of red on this screen. So showing the bifurcated market we've been talking about and the fact that you really have to pick your spots. Now, picking energy or financials, it wasn't really hard to find winners in there. So it's not like it's a needle in a haystack. But obviously this week in consumer discretionary, there was a lot of difficulty. Still in technology and healthcare had its issues. Now it's very interesting to see biotechnology not make a bunch of new lows with some of these others, because it has been one of the weaker sectors as of recently. Moving over to our percent above the moving averages, again we can see everything is pretty much muddling around. Water's pretty bad. Independent power renewables pretty bad, but other than those two, the only one we're seeing negative, or not negative, red highlighted percent above is the 5% above the 50-day moving average is in consumer discretionary interactive internet and direct marketing, and 7%. Now, again, those are pretty washed out levels that don't tend to last too long. Media and entertainment, on the other hand, which has been one of the weakest sectors overall, is starting to perk up and show some advancement in these areas. Another page we're working on but haven't really released just yet is a page that monitors a good bit of our RSI work and some of the different important areas in there that we like to focus on. Now, as we start into the sectors, we of course have to start with the energy sector because it's been a leader for a good while now. The thing about the energy sector, as we'll see when we go down here and look at our equal weight index, you can see that it's been very much a boom and bust type scenario. The runs are hard and the pullbacks are just about as hard, but tend to make higher lows on each one of these so far. So we like to see that, and now we're right back up near these highs and actually breaking out and trying to hold this breakout on the entire equal weight sector. This is a great sign. RSI is up near 70 now. The 9 SMA on RSI is on nitrous at the moment. All of these signs say this is a strong area. It doesn't mean it can't move sideways or pull back a little bit, which certainly could be the case after the runs we've seen, but it's also something that's hard to count on when you're looking at some of the setups we're seeing inside. Even though many of the stocks have made very strong moves over the last couple of weeks, they're right near pretty nice breakout levels themselves. Now, on the breadth scenario, energy breadth has just remained very strong, 82% above the 200-day, 88% above the 50-day, and 93% above the 20-day. Summation is turning up and running, just hasn't made it back above zero yet. And you've got strong positioning on both the McClellan oscillator and the Brett thrust. Nothing here is bothering us. And on the relative comparative, you can also see from a sector as a whole, energy continues to have this boom and bust type thing, but continues to make higher lows across all of its different comparative measures. Now, from a standpoint of are we looking at any new lows in energy names within the sector? No, they're pretty much non-existent at the moment, and the new highs, 10-day, 21-day, and 63-day highs remain strong. And notice the 63-day highs aren't near what they were on these last couple yet, so it looks like we could still have a little bit of movement underneath the surface if we repeat similar to what we've done in recent legs in this sector. Now, oil and gas production is a clear leader here. It's stayed on top for quite a while, but the ones I'm going to focus more on today are equipment services and oil and gas consumables. Now, if you want a real high dividend type play or areas, the oil and gas storage and transportation, pipelines, trucking, things like that, those are doing well. Shipping in that space are doing well and improving as well. Very high dividend plays to allow you to kind of get paid while you wait too. But I'm going to focus on these two middle ones as we get to the subsector side. From an ETF standpoint, you can see that you've got a lot of strength here over the last week, month, even quarter, as this has become more in favor. I personally like the RYE because it's an equal weight and it gives me opportunities on all levels of this market. Yes, your biggest stocks like Schlumberger, Halliburton, ExxonMobil, all those guys are moving very well, but energy is one of those areas when the small and mid-cap areas move, they can move really, really strong real quickly. So we want to focus on those, and this has been beat up for so long and it's such a small portion of the S&P 500, it could be that a lot of names we know have fallen into that mid-cap space and have opportunities to move up higher. I've highlighted one just to kind of give you an idea. The oil services here to give you an idea that we've seen big moves so far this year, but we're also right up against big levels. And this is the ETF, OIH, that shows you an inverse head and shoulders building right here for a potential breakout. And as we look down, if we want to look down into the stocks in the particular sectors as well, which I'll look at one or two, you'll see that they are setting up very well too. Now moving to the equipment services subsector, you can see right here that it's very strong and moving up towards this downtrend line on its particular chart. Now again, it has been somewhat of a laggard in the overall space, and when you look longer term, it's just got this monstrous base it's trying to work its way out of. So we might consolidate some up here towards these areas, towards these highs before we move on, but this really is looking like it wants to break out here at some point here in the near future. Now the breadth here in this area is very strong too. Mains pinned towards the highs, not showing us any weakness inside there, and the relative comparatives versus everything except energy is already strong. And as we can see here versus energy, it's even starting to make the turn and trying for a potential double bottom breakout here soon. That would be a great sign if oil services broke out versus the energy index and energy remains the strongest area. No new lows to speak of anytime soon or recently. Now in this particular area, you can see there's a lot of different relative strength to play. Again, being one of the laggards, you can either play the high relative strength or play the movers. We really liked when we looked in at neighbors. Again, here's a good example of something that made a really strong move Friday and a pretty strong move this week. But looking over here at this weekly level, wow, looks super strong in the potential for this inverse head and shoulders breakout here. And the daily level just moved into a new RSI bull range. So I would not count this one out just because it had a 12% move on Friday. I would just do my best to make a good trade plan that can help incorporate that, or be patient and see if it consolidates a little bit for you under these highs. But that's a good example of where things are. Now, when we move over to the consumable fuels chart, we can see here that this is another strong setup to where it had a nice long run that has pulled back. Let me get the rest of this chart in there. Nice long run that has pulled back into mid-December, has now moved back up to the highs as we enter the new year and challenging them. RSI is in a fresh bull range, and we pull down here and look at the breadth in this area. It's really strong as well. Hasn't been improving greatly. So again, something we want to look at here as we keep moving down. Our relative comparatives here in the consumable fuels, you'll see, are strong versus all the other markets except for energy itself, and it continues to move down. So it'll be interesting to see if this one can make a turn, unlike equipment services that's already started to make that turn. Now, when you get in here and you actually start looking at the stocks, again, quite a few names that jump out and look nice. But I want to show you another one that had a strong day on Friday, but still does not look like it's something we should necessarily be ignoring. HFC, Holly Frontier, is a company in this area that's right at a big weekly volume level. Looks like it's breaking above it. RSI moving above 60 on the weekly, and the daily is running on its new bull range as well. This is a strong chart as we move forward, and it's something that, again, it might take a couple days to consolidate. Yet Friday's big move, or it might not, could blow on up and try to challenge these highs near 42, which is a good move from here. Now, as we move into financials, this is a sector that we want to take a look at as well, just because it has been the strength, and it tends to be stronger when you have inflation or interest rates going up. This one, again, is right here near the highs after a big pullback into December, has made its way back up, RSI in a new bull range, and financials as a whole, and it just does not look like we're seeing any weakness as of right now. The breadth itself is not strong as energy, but is strong and is pretty much moving up on most levels. Now, you can see the short-term breadth since late December has kind of moved sideways, but it has not affected the long-term or percent above the 200-day moving average very much at all, and new highs continue to do pretty well since the year started. So financials as a whole are holding up pretty good, and a relative comparative tells us the same thing. And then when we look at the percent making new highs and new lows, we can see there are very few new lows. Again, more than energy, but not many at all, comparing all these new highs that are popping up percentage-wise in that particular space. Now, the sectors, regional banks here has been your clear leader and has been the strongest area of this market. But banks have come on decently over the last few weeks, as have thrift and mortgage. So those are the two areas we're going to glance at real quick after we take a look at the ETFs. From an ETF standpoint, this is an area that regional banks are still up there at top, but at this one I have sorted right now by the relative movers. And as you can see right here, from a relative standpoint, regional banks are still up there. But from a weekly performance standpoint, you can start seeing right below these regional banks, regular banking start to jump in. And then when I look at this particular banking sector, I can see that it has already made new highs on its equal weight index, and it's trying to consolidate above them right there with RSI pretty high, so it might need a few days, but it has already made the breakout. Now we're just watching to make sure it doesn't fail. Breadth is supporting that breakout with a lot of strength across the board in banking, 91% of them above the 20-day moving average at the moment and 67% above the 200-day. That's not something that we want to scoff at. And when we look at the relative comparative chart, we see huge surges since the beginning of the year across all of our comparatives. That's all the major indices, financials, and our universe as a whole, and almost zero lows. This is almost starting to look like an energy sector, but it's not. It's banks. So when we look at this from a bank standpoint, you have a good bit there. I'm not going to jump in here now to the individuals, but there are quite a few in there that are worth looking at. You can come to this grid and you can hit each one of these, and it will take you to a trading view chart. These are my templates, but it'll take you to a trading view chart that you can take a look of and get a deeper view of these stocks. Thrifts and mortgage is the other one I wanted to touch on here. This is an area that basically, again, just broke out. Regional banks are a little further, but this one just broke out here, and it looks like it's starting to move in the right direction. So this is thrifts and mortgage finance. So these are going to be your lenders as well as thrifts and savings type scenarios. Now with this particular area, you can see the breadth is not quite as strong as the others, but it's all moving higher and moving in the right direction with good participation, and the relative comparatives have also been very strong comparing to most, if not all, other sectors since the beginning of the year. So these financials as well are really taking a big. OCN is probably your leader. Yep, your number one or 100 relative strength ranking here. Likely it's a scenario to where this one has already moved out on a daily basis, but as you can see on a weekly basis, it's just above this volume area and still has plenty of room to get back to its highs near 70. Next sector we're going to look at is materials. I'm not going to go inside this one. I'm just going to look at the overview due to some of the time challenges I have here in getting this video done. So materials, we see here we have a little bit of a handle, a cup with a small handle here and right back up near those highs this week. It was one of the stronger sectors this week, and the RSI is in a bull range and holding up here as the rest of the markets have some difficulties. Now breadth here as well continues to improve, but is closer to market performance. So this one is not, I guess you could say, has not moved as far and not as extended as the financials or energy, but it is one that's certainly waking up in this scenario. The only thing we want to be a little bit concerned about here is this little bit of drop off here on this last sideways move. So are we losing breadth while the markets are holding up there? And could that mean we're ready for a break? Or is it just consolidating before this breakout? As we see on this chart that's a little bit more zoomed out, the relative comparatives are definitely there on materials sector, but this base right here is a much larger. So we have the small cup and handle I showed you in the top chart that's almost inside a larger cup and handle on this chart as well. This one again not quite as strong, showing a few more new lows on this last little test, and basically still trying to work its way through those highs. Now industrial metals are your leader here and have been for a little while. Basic materials are next, and then chemicals. All three of these sectors have some really good looking names inside of them. Precious metals, though, interestingly enough, was your top performer for the week and looks like it might be trying to start to tag along on this materials move. It has underperformed for quite a while, so we'll see if it actually does or not. In the ETF space, it's your natural resources plays that tend to be kind of spread out and all that are top areas. Copper, one of the industrial metals we talked about, industrial pick, metals and mining producers. These are areas that have shown the strength not only in our equal weight, but also in this ETF. Also, don't forget something like wood. With lumber continuing to run, these types of areas could also have some good strength left in them. Nice little cup up here or base up here on the weekly chart, looking like it wants to move back over 60 now. All right, now we move from here quickly over to, not consumer staples. We are going to move to communication service. A tough space, definitely, but as we see during the weakness so far this year, it came down a little bit right off the bat, but has moved sideways since the first couple of days. This area is gaining a little bit on the 3-month relative strength, and I noted that in the chart earlier, but still has work to do on the 6 and 12-month readings up here in our chart. Now the RSI is still in a bear range as well and below 50, so we want to make sure that we see a break above this 50 and some movement and here before we trust this a whole lot. But we have a nice sideways base after a long time of underperformance for this sector as a whole. This goes all the way back to February of this year, kind of like the small cap area where it peaked out. It's now below this range and sitting down here, so this could be a bear flag. But as I said, we're starting to see some nicer moves in some of the stocks inside the particular sector. I'll take a look at some of them in the stock overview that I will do probably tomorrow. Now the breadth here again continues to be poor, so this really is a kind of like a strong pullback play that you're looking for a change in character. Now in our relative comparatives, we're starting to see that change in character a little bit versus the markets. It just hasn't shown up quite yet in the overall breadth in some of the other areas, and it may never, but it's something that we want to pay attention to if we continue to see good looking chart setups as we have in a couple of those subsectors. Now media and entertainment and interactive media and entertainment have had some really good setups the last couple weeks and saw positive movement this week in the week where S&P 500 was down a little bit and the small caps were down even more, which many of these names fit in that area. Now, communication services ETFs, your top player here is still your 5G, NXTG type play, and then equal weight communication services I think is a good way to look at it. Now, a lot of people like some of the larger ones so they can weigh on Google and things like that, but those just really have not been the ones that have been moving the most within this sector. Again, you have Discovery, you have Zynga, who got bought out, you have Viacom as a larger player, Sinclair Broadcasting is one that caught my eye, and then you kind of rank it by the movers, and you have Dish and Ever, EVER, WWE, some of these others that you just don't necessarily think of when you're just looking at the majors in these areas. All right, so I said after that we're going to go through and we're going to touch really quickly on technology to end this thing. Technology is right near the low of the ranges. It does not look like it has turned up yet. However, it is holding this 40 level on the RSI. That is a very, very small positive for us to be working with, but not anything for us to hang our hats on. Now, from a breadth perspective, technology is pretty poor and has been moving its way down for quite a while. So it has to show improvement before you can put a lot more weight into a reversal here. But I want everybody to see this. We're really just still in the sideways range we've been in from February of this last year, of 2021, 11-month range that we're trying to work our way through. During that time, it's lost a lot of comparative strength, of course, but it has not lost as much absolute from a equal weight standpoint as many people have make it sound. Now, semiconductors continued to be our leader and was a strong player again this week. All the rest of them were down. Software being by far the weakest and continues to be one of the weakest. However, it is something I want to still focus on because I noticed that there was probably 30 to 40 software names when I was looking at them that were up well more than the markets this week, up 1 to 7% on the week. And that's when the markets overall were down about 1%. So that's something we certainly need to keep our eyes on. But when we look at the ETFs for right now, other than semiconductors, the rest like TDIV, high dividend paying technologies, Drive and iDrive, which are autonomous vehicles. So you either have to be in a theme or semiconductors or 5G type of area. Software and some of the hardware names and all that have been our software's had a harder time for quite a while. Some of the hardware names have taken a hit over the last week or two, kind of playing catch down to some of these other areas. So I'm not saying don't look inside software, and I'm going to look at some of those stocks in our stock selection video. Our power stock video here I'll do probably tomorrow, but for now it's something that you need to make sure the risk that you are entering when you enter in something like software that has pulled back so hard. All right, I hope this helps everybody, and we're a little over 22 minutes, so I'm going to stop it here, and hopefully by tomorrow morning before the open I'll have some stocks that we can review and get you started for the week on that level. Hope everybody has a great week, and as always, I hope this helps.